There's not a lot of bipartisanship these days, but apparently dismantling financial reform is the exception. In 2008,
the housing market already awash in subprime foreclosures.
650,000 homes in the United States in foreclosure right now.
The Lehman Brothers will file for bankruptcy this evening.
Stocks all around the world are tanking because of the crisis on Wall Street.
2 years later,
the A's are 60.
Congress passed the Dodd-Frank Wall Street reforms to prevent another catastrophic financial crisis from happening again.
Because of this reform, the American people will never again be asked to foot the bill for Wall Street's mistakes. There will be no more taxpayer-funded bailouts, period.
But Republicans have been looking to rip up Wall Street reforms ever since, using smaller banks as a decoy for bigger ones.
I rise today to discuss S-2155.
And now they're about to pass a rollback bill crafted by Banking Committee Chairman Mike Crapo. Democrats had the numbers to stop it in the Senate, but instead more than a dozen of them joined the Republicans to move the bill forward. Dodd-Frank's core is a new set of rules for banks with more than $50 billion on their books. They have to back off of their riskiest practices, and they have to prove twice a year that they could survive a new crisis without going bust. Now Congress wants to raise that threshold from $50 billion to $250 billion. That would mean fewer than 10 US banks still qualify, and that stress testing would be less frequent and less rigorous. Dodd-Frank also enhanced oversight to make sure that banks can withstand heavy losses. But Crapo's bill makes it so that the most important banks would make riskier deals, thus increasing the chances of another crisis.
The Congressional Budget Office came out with an assessment of this bill that said that it would make it more likely that we could see a collapse that would affect some of these major banks and put taxpayers on the hook for another bailout.
Let's not forget,
mortgage crisis,
subprime mortgages, liar loans.
The financial crisis happened because banks sold homeowners loans that they couldn't afford. Dodd-Frank made it harder for banks to trick borrowers again, but Crapo's bill loosens those restrictions for the smallest banks, which exposes all of us to risky lending practices. Dodd-Frank didn't just try to make the financial industry less risky, it also took aim at racial discrimination in housing, which was a key factor in the financial crisis. Dodd-Frank expanded the data that banks are required to disclose about the people behind mortgages. Crapo's bill rolls back those requirements for about 85% of all banks and credit unions in the United States, making it much harder to track housing discrimination. Advocates for the bill are arguing that this is
relief for our community banks.
Community banks. Small community banks.
But the truth is, between the tax cuts and Dodd-Frank, we've reached phase 2 of the big corporate giveaway.